Hey, what's going on, everybody? We are live with Financial Fitness Friday. I got my co-host Dave. Dave, what's going on, brother?
Jonathan, I'm great. How are you, pal?
I'm good. So, what we're gonna talk to, I don't, we're gonna go over how to prepare to get financing. Okay, not how to get it, but how to prepare to get it, because a lot of people don't do this the right way. A lot of people get this wrong, and the people that get it right usually pay a lot less, get their financing faster, and to get better programs. All right. So if you are going to prepare, you need to one, make yourself look as strong as possible. We'll get into that in a second. Two, you need to know where to go, what the advantages are, what the disadvantages are of each place, whether it's a broker, a bank, a play, or like an institution like mine. Okay. And then you have to know the right program for what you're trying to do. Okay. Those three things are vital. So if we're going to unpack that a little bit, first off, how do you prepare to apply for finance? Well, you need to, if you're going to take a test, you need to study for what's going to be asked, right? So what are they looking at when you're applying for financing? They're looking at your time in business, they're looking at your credit, both personal and business credit. They're looking at your cash flow, and then looking at your profitability. That holds true for 90% of financing programs. Okay. So, right off the bat, if you're focused on those four things, you're going to have an easier time. So, how do we prepare for that? Time in business is really nothing you can do about it. However, credit, you want at least a 650, but I would really tell you ideally 700, because if you have a 700 credit score, it should open up almost any program for you, whether it's an SBA, a term loan, a line of credit, working capital, equipment financing. So, one, I would say always check your personal credit. And if your credit's low, hit Dave up. Go to Dave, make sure that you have your credit in as best shape as possible before you move forward. They're also going to look at your business credit, especially on certain programs like equipment financing or an SBA. So make sure you actually check your DMB score. Okay. That's very, very important. Having those two squared away is vital. Now, can you get financing if you don't have great credit? Yes, you can. We do it all the time. However, we're talking about being optimal here. All right. Next, cash flow. Okay. You want all the revenue going into a business bank account, and you want to keep at least 10% of your monthly average in the bank at all times. What I mean by that is if you're doing $100,000 a month in revenue, right? You have a seven-figure business, you're doing 1.2 million a year. You really should be keeping at least $10,000 in the account at all times. All right. The other thing is always have just a checking savings. I know everyone loves profit first. It's a nightmare. Don't do it. All right. That is important. And if you're looking for a line of credit, make sure you have 8 to 10 or more deposits a month. Okay. The more you deposit into a business bank account, it shows. Sorry, guys, I'm sick. But what it does is it shows that you guys have more clients. The more clients you have, the less risky you are to lend to, right? So cash flow, keep at least 10% in the bank at all times. Try to have revenue increasing or at least steady. And the more deposits, the better. All right. I'm trying to abbreviate because if we're just going to go into every little nook and cranny of this and unpack this whole thing, we'd be here for an hour. All right. Next, profitability. The first part of that, being profitable, you actually have to know. Like you have to have your financials. So many people don't have their financials done. So keep your financials up to date, have your tax returns ready, and have a year to date always handy. That will make your life substantially easier. Okay. And then let's talk about, now that you're prepped, let's talk about where to go. Okay. There's brokers who are going to charge very high fees, and they usually don't have all the programs that you need or the relationships to open up the real programs that you need. There's banks banks are not incentivized to move fast. Okay. They may or may not give you the best terms, but a lot of times they don't have all the programs that you need either. Like they don't offer invoice factoring. Some don't do equipment financing. Shit, some don't even do SBA loans or lines of credit. Okay. It's really dependent on that bank. And then you're waiting a very, very long time to get an answer from them because they're really not incentivized, right? You have a paper pusher that gets paid either way, whether you guys get approved and funded or not. That's the truth. That is the truth. Sorry. I have a lot of friends in banking. It is what it is. All right. You guys, they eat no matter what. Right? Am I saying something wrong, Dave? That's the truth.
Fact.
It's a fact. All right. But a lot of times they don't even have the scope of knowledge of some of these other programs. And banks are very rigid in their underwriting. Okay.
Yeah. It's more like a middleman running a branch, right?
Yes.
And outsourcing it to corporate, to underwriting and whatever.
Yeah, that'll wind up on my desk in 3 weeks later anyway. So skip the frustration. And then like a place like Biden. Honestly, I don't know too many places that do it the way we do it, but we act more as consultants and guide as opposed to, a bank or a broker. And we want to make sure you get our clients win. All right. Now you understood how to prepare, what your options are and where you go. The next thing you have to do is pick the right program. All right. I have a full course called Capital Tools, just launched yesterday. Tons of bonuses. That will teach you everything you need to know. Thank you, Dave. That will teach you everything you need to know about the programs, what's available, and what you should use for what. All right. So please check it out. If you go on my LinkedIn tree or my link tree, you will see Capital Tools right at the top. Grab it. I priced it stupid cheap. Normally that something like that would be a couple thousand. I did it at $500 and there's like $2,000 in bonuses. I did it that way because I actually give a flying fuck about business owners. And I wanted them to get out of the misinformation cycle, which is online, on Facebook, everywhere, on social media. And that program in and of itself will definitely help you guys run your business. However, a concept that you need to know, whatever financing you're taking, it should match the lifespan of what you're using the money for. All right. I'll give you an example. When you buy a house, you don't buy a house with a 5-year mortgage. Why? Because you're going to live in it for 30 years. It doesn't make sense to pay it off in 5 years. Okay. Buying equipment should be 3 to 6 years, right? Because most equipment is going to last 5, 6, 7 years. The reason you do this is you never want to pay for something too short in a shorter term, because when you pay for things short term, you hurt your cash flow. On the flip side, you don't want to finance something over the lifespan, meaning over the expected use of whatever you're financing. So if you bought a piece of equipment and you got a 10-year term, but that equipment craps out in year 5, well, what's going to happen then? All right. Now you have a whole nother payment and you don't have that equipment anymore. All right. Same thing, lines of credit. Lines of credit are great for short-term things, inventory, supplies, marketing. The whole idea of having a line of credit is to tap it. So you want to use it, pay it off, use it, pay it off. Okay, SBA loans, they're going out over a long time. It's perfect to acquire a business. Okay, it's perfect to consolidate a lot of expensive debt. All right, so you have to match the right program for the right use and the right need. Same thing, you're going to go buy a building in your business name, you're going to want an SBA loan. All right. If you're B2B and you're having short-term liquidity issues because you're growing too fast and you're always waiting for payment, that's invoice factoring. All right. So you have to make sure you match everything up correctly to get, 1, the most benefit out of the program, and 2, for your business to grow the fastest and the most. All right, Dave, what questions do you have? What do you got for us here?
so to go back to like speaking of institutions, I know you talk about banking, like where does a credit, like take a credit union, for example, where does that fit in between? What's your take?
So, credit unions are great, but I know that banks are tightening up at a very, very fast pace, almost uncomfortably fast. Right. And so a lot of places just don't want to lend anymore. Credit unions are really good because sometimes they have really cheap financing for their clients, especially depending on what your deposits are. But they definitely don't have all of the programs. I'll give you a great example. I actually made friends with the guy who runs the SunTrust by me. And I was speaking to him, and I'm like, hey, so what happens if someone comes in here and needs a line of credit for their business or a loan or whatever? No, we really don't do that. We steer them towards a home equity line of credit. What? Why? Okay, you should never borrow off your fucking house
For dumb shit.
to float a business. Okay, you do not do that. Mm-hmm. And he's sitting there telling me this, and then I started answering him like, well, why do you do that? Well, we really don't have the other programs. They're really not great. Okay, fine. Do you work with any outside parties? No. All right, well, work with me. You know what I mean? And then I asked him, I'm like, if I asked anybody here besides you about invoice factoring or about equipment financing or an SBA loan, are they going to know anything? He goes, no, we don't train on it. We don't know it. So the thing is, a lot of banks just have their programs that are pushed down from HQ.
Yeah.
And that doesn't work for a business owner. Okay. If you're operating a business, you need the best tools, the best guidance, the best systems. Fucking period. Amen. Okay. A lot of times you're not going to get that elsewhere. What else you got, Dave?
Just pushing a product. No, I mean, as you know, I think at the end of the day, and you know, guys, follow this guy because I've learned a lot from Jonathan over the last 2 years, right? From everything else. And it's actually like, yes, it's credit, but I understand that on the flip side, what happens after that, because my job is just credit, right? It's not, okay, what's the barrier of entry for XYZ, you know, and that's helped me a lot too, because I'll tell you what, most of the business owners that even just come to me, and a lot of times it's just simple consulting. Again, I don't know how many times we said this, but control your controllables. Moving forward, it's credit's the barrier of entry, right? So the two main controllables: pay your shit on time, right, and pay down your credit cards. The biggest problem that I've seen, especially from some of your guys, it's stop using personal credit cards for your business expense. Even if you pay them off in full every month, it doesn't matter, because the moment you let that statement balance hit and it shows you're at 70% utilization, yeah, you know you're paying it off, but guess what? That report is good for that time until the next cycle. So if you want money, right, you're still probably 2 weeks to 30 days out until you get a fresh cycle coming in. It's not going to update right away, right? So on a 30-day window every single time.
Dave, how many people do I send you that are 20 points, 50 points, 10 points off of getting that fucking SBA?
Tons. And it's all shit they can control.
It's every week. It's every fucking week. Yeah. All right. So guys, this part of it that Dave's talking about, it's vital. You need to control that, because I have so many clients that were in the middle of an SBA, credit drops, gotta get it up, gotta do XYZ. I tap in Dave, hey, I need you to do this. Meet this person. And then he's having the same conversation. So listen to the advice and actually take the steps you need to execute on it.
Yeah.
I didn't mean to interrupt you, but it's something that drives me fucking crazy, because we have people that are, 4 weeks, 2 weeks, 6 weeks behind because of it.
Well, and that's the barrier of entry, right? So like that's the most simplistic. That's the most simplistic thing that anybody can handle, right? Like as a business owner. And a lot of people don't understand that. It's like, look, and there's certain cards, I get it, that do report to your personal credit. That's another topic. But, the idea is to stay away from those. But stop using that stuff for a month. Yeah, suck it up. Use a debit card if you have to. Or, you got to figure out how to get away from that. Get yourself some business credit cards that don't report, and then go back to your merry ways. There's 50, 30, it's usually a 30 to 50 point barrier that somebody's short, and it's all stuff they can control. I can't do anything for you. That's a fact. that's just paying stuff down, but that little thing, it's going to hold you back 30 days. And the last thing I'll leave with this, a DUNS number, as Jonathan was talking about, business credit is very easy to get. Every business has one. The moment you're filed either with an EIN or LLC, you should get it within the first 30 days. It automatically comes up. Go to DunandBradstreet.com, look up your own profile, follow the steps, and get your DUNS number. Very easy, and it's free.
Awesome. All right, guys. Listen, I'm going to link the course on this video if you guys are interested. Appreciate you guys spending a little bit of time with us. We will catch you on Mindset Monday. Hope you guys crush the week. Hope you have a great weekend. And we are out. Share this with someone that needs to hear it. We appreciate you guys.